Coinbase reported first quarter 2023 earnings, and the stock price is soaring in response. It's up 17.6% after these earnings were announced. So I went through the earnings report and I've pulled out the key data that I think you should know from Coinbase's Q1 earnings. And I'm also going to answer if this increase in the stock price is justified or is the market overreacting to the news. So let's begin. So revenue decreased to 736 million. This was down from 1.165 billion in the same quarter the year before. But that drop actually masks the actual decrease in activity on the website. If you look at the transaction revenue, that crashed to 374 million, down from 1 billion year over year. The company was able to make up the difference because of the increase in interest rates. They were able to generate a good amount of interest income while paying a lower amount to their consumers, to their users, for holding their assets on the platform. Impressively, the net loss improved to 79 million from a net loss of 430 million in the same quarter last year. And here's the sauce, the recipe for Coinbase's success, in my opinion. They've got to bring the business down to where current cryptocurrency demand is, right? They've got to forget about the boom times during 2020 and 2021 when everybody and their cousin was buying cryptocurrency, talking about cryptocurrency, watching videos on cryptocurrency, and cryptocurrency was all the rage. That's gone. That's unlikely to ever happen again. Cryptocurrency is unlikely to ever be as popular as it was in 2020 and 2021. I think that was the height of cryptocurrency. I don't think that it's ever going to return to that level. That level was an absolute boom, an absolute surge to the cryptocurrency economy. So they are partly doing that, right? So I like the steps that they're taking. They increased pricing on transactions, right? So those loyalists that have remained interested in cryptocurrency, right? There are those that have said, buy and hold forever. I'm never going to sell. There are a core group of cryptocurrency believers that are not going to sell. They're going to stick around, right? And that is the benefit for Coinbase. Even though the cryptocurrency economy is never going to boom up to where it was in 2020 and 2021, doesn't mean that it's over for crypto, right? They've attracted a core group of users, a core group of fans that are not going anywhere. And the key is to serve these customers well and profitably. And that's what Coinbase looks like they're doing. They're increasing prices, right? Okay, you're a crypto believer, you're a crypto fan, you're going to trade on our platform. Excellent. Now we're going to raise prices to make sure that we monetize off of your transactions, off of your trading, and also bring down the employee count, which they did. They reduced the employee count to 3,535. This was down from 4,948 and down by nearly 1,000 from the previous quarter. I wouldn't be surprised if they did more, because even at this rate, they're still generating a net loss. So there needs to be more cuts, and I suspect a lot more cuts, because Coinbase generated a net loss of 79 million when interest rates were really, really high, which was a big benefit for Coinbase, right? So if we fast forward 1 year from now or 2 years from now, when interest rates are much lower and Coinbase is not generating that revenue from interest income, the net loss is going to be much, much worse. So in preparation for those times, Coinbase really needs to bring down this employee count. If you're losing money with interest rates this high, you're really going to be losing money when interest rates decrease a year from now or 2 years from now, right? And I say interest rates will decrease because right now interest rates are in a restrictive territory. interest rates do not remain at restrictive territory for very long, because central banks, when they observe that the economy is slowing down too significantly, they will lower interest rates at least to neutral territory from restrictive territory. And those are theoretical numbers. There is no actual number that says this is the neutral interest rate. Now, there has been some studies that suggest, somewhere between 2.5% and 3% federal funds rate is the neutral rate. Right now, the federal funds rate is up at 5.25%. So interest rates, in my opinion, will trend downward over the next 2 years. And so Coinbase needs to prepare for that. But speaking specifically for this quarter, I think Coinbase made the right moves this quarter to bring the business better in line with the way cryptocurrency demand is. And they made good progress on that front, reducing the net loss. And they need more steps on that front. So a stock price reaction increasing following these earnings results was justified in my opinion, but Coinbase needs to continue. I don't want them to think, okay, this is good and we're going to stop here. All right, so that's all I've got for this video. Thank you so much for watching. I'll see you again soon. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.